Hey everyone, Khai here, your local mortgage broker right here in Calgary. Let's be honest, hearing a no from the bank can sting. You worked so hard, saved up, kept up with all of the payments, and yet that mortgage application comes back at, oh sorry, we can't approve your mortgage right now. Whether you're a first-time home buyer trying to get into the market, or a homeowner hoping to refinance and get your finances back on track, that moment can feel defeating. But I want you to know that no doesn't mean that you're stuck. It might just mean that you haven't talked to the right lender yet. Now, before we go any further, I want to make a disclaimer. In this video, even though I talk about alternative lenders, it does not mean that I can guarantee you approval for your mortgage. Just like everything else, alternative lenders will have their own sets of terms, conditions, and requirements which will not be appropriate for everyone. The message I'm trying to convey is that if you are looking for a mortgage, whether to purchase a home or to refinance an existing one, if the bank says no, there are other options available that you can explore before you decide how you want to proceed in the most appropriate way for you. Also, if you enjoy content like this, please consider giving the video a thumbs up and subscribing to the channel. If you have a topic you would like me to talk about, please leave a suggestion in the comments below. And now let's get back to the main video. So why does the bank say no and why it's not about you? The thing about traditional bank is that they have a very specific set of boxes that they have to check off. And if you don't fit inside these perfect boxes, you get declined. This is especially true if you are buying a home and have less than 20% for down payment. By having less than 20% for down payment, you're applying for a high ratio mortgage, which requires you to purchase a mortgage default insurance. And now, the boxes get even narrower. If you want to know the differences between types of mortgages, comment yes below and I will make the video addressing the topic. So these are the various reasons why the bank might say no to your mortgage application. Maybe you're self-employed or your income source may be different than the traditional means. Maybe you're new to Canada and don't have long credit history yet. Or maybe your credit took a dip after a tough year. Or maybe your debt-to-income ratio looks too high even though you never missed a payment. Traditional banks see and place a strong emphasis on data while putting a light weight on life story and circumstances. That's why so many good, hardworking people are getting declined, even though they could comfortably afford their home or their refinance. Now here's the good news. That no doesn't necessarily mean the end of the road for you. There are other lenders called alternative lenders that actually look at your full story, not just your credit score or your income type. They're sometimes called B lenders or subprime lenders, but what matters most is this. They specialize in real-life approvals. They look at the equity that you built in your home, the consistency of your income, even if it's not traditional, your repayment history, and your plan to move forward. That's how so many Albertans, people just like you, are still getting a yes after hearing no from their bank. Now, let's talk about how the yes happened. We'll start with home buyers. You might have been told, sorry, you don't meet the income or credit requirement. But alternative lender can often see beyond that. Maybe you're self-employed and your income fluctuates from month to month. They'll review your bank statement or business deposit instead of just your T4s. Maybe you're new to Canada. They'll consider your rental payment history or foreign income. Maybe your credit took a small hit after a life event. They'll look at your current pattern of recovery, not just a single score. I have worked with so many people right here in Calgary with situations just like the one I mentioned previously. The bank declined them because their income didn't fit on paper, or because the credit took a hit as a result of a tough year, or they might have a fluctuating income sources. We work with alternative lenders who can provide real solutions for these people. So if you're serious about buying, don't let that bank no be the end. Sometimes it just means that we need to approach it differently. Now, let's talk about homeowners. You already own your home, but maybe debt or cash flow has started to feel heavy. The bank might have said, your ratios are too high, your credit score dropped, we can't approve your refinance right now. But here's the truth, your home equity can still be your greatest asset. Let me give you a real example. A Calgary family came to me earlier this year with 6 different debts: credit cards, a line of credit, and car loans. They were paying almost $1,900 a month. Their bank declined their refinance because of the credit score issue. We found an alternative lender, used the equity in their home, and consolidated everything into one mortgage payment. Now their payment is $1,000 a month, and they're saving over $10,000 a year. And as a result, they sleep better, they spend time together, and they're already rebuilding their credit for the next step back into a traditional lender. A lot of people say that alternative lending is risky. Let's talk about that. Whenever I mention alternative lending, people ask, isn't that risky? And my answer is, not when it's done strategically. Alternative lending can be used as a short-term solution. It's a bridge, a short-term, flexible solution that helps you get back on track. It can help you get into your home sooner, reduce your stress, and then transition back into a traditional lender once you build your credit or document more income. In other words, it's not about borrowing more, it's about borrowing smarter. In some instances, alternative lending could be a long-term solution. With higher living costs and so many mortgages renewing over the next year, a lot of Alberta families are realizing that flexibility is key. Even though the Bank of Canada had just started cutting rates, lenders are still cautious. So this is a perfect time to look at your options before the rush. Whether you're buying your first home or refinancing your current one, the key is not to wait until stress turns into crisis. Let's plan ahead. Find the right lender and get your finances approval ready. So here's what to do next. You can download my free mortgage document checklist. I'll leave a link in the description below. It will show you exactly what document lenders look for and help you get organized. Or if you want to have a one-on-one conversation and have your situation reviewed in greater details, just comment the word booking in the comment below, and I'll be sure to reach out to you and schedule a time so that we can go over your situation together. No pressure, no sales pitch, just clarity and real plan that fits you. My mission is really simple: to help 10,000 people who've been told no by their bank and find their own yeses. Because everyone deserves a chance to move forward, whether it's buying your first home or getting breathing room in the one that you already love. My name is Khai Luu, and I'm here to help you create financial possibilities. Thank you so much for watching, and I'll see you in the next video.